G'day, I'm Dazley from CMK Accountants. Today we're talking about something that causes a lot of stress and confusion. Can the IRD just really take money out of your bank account? Well, the short answer is yes, but before you panic, it's not as random or aggressive as the rumours may make it sound. So let's cut through the myths and talk about what actually happens and what is actually true and what your rights are. And most importantly, how to make sure this never happens to you. So here's the deal. The IRD does have legal authority under Section 157 of the Tax Administration Act to take money from your bank account to recover any overdue tax or child support. They do this by issuing what's called a deduction notice to a third party, like your bank or your employer, requiring them to pay the IRD money that you owe. But here's the key. It's typically the last resort and not their first move. In all our years of working with rural businesses and families across Taranaki, we've never seen the IRD just randomly empty someone's account. There's a process, and if you understand it, you can avoid ever getting to this point. So here's what usually happens before the IRD takes this step. First, you'll receive assessment notices and reminders about your overdue tax. Then, the IRD will attempt to contact you about setting up a payment arrangement. If you don't respond or make arrangement, that's when collection action starts to escalate. And as a last resort, they may issue a Section 157 deduction notice. Now, here's something really important. If you've been keeping to an instalment arrangement you agreed to with the IRD, or if you're formally disputing the assessment, a deduction notice typically will not be issued. This is why we always tell our clients, don't ignore IRD letters. Even if you can't pay right now, talking to them early means you have options. Ignoring them means you just lose those options. Okay, so how much can the IRD actually take? Well, it depends on where the money is coming from and what type of debt you have. Firstly, from your wages. For overdue income tax and GST and student loans, which are the usual suspects, the IRD can deduct the lesser of 10% of your tax debt or 20% of your gross wage each pay period. Let me give you an example. Say Kerry owes $3,000 in overdue income tax. She earns $900 gross per week. The IRD can issue a deduction notice to her employer for the lesser of $300, that's 10% of the debt, or $180, which is 20% of her $900 weekly wage. So her employer would have to deduct $180 a week until the debt is paid off. For child support debts, it's different. They can take the lesser of the total debt or 40% of your net pay after PAYE. And from your bank account, the IRD require your bank to pay the full amount owing from your account balance. However, and this is important, the IRD cannot push you into overdraft or further into overdraft. And banks generally aren't required to monitor your accounts daily, except in exceptional circumstances. Now here's something that many Kiwis may not know, and it's especially important for farming families. The rules around joint accounts changed back in 2010. Before 2010, the IRD could not take money from a joint bank account just to pay one person's income tax debt. If you and your spouse had a joint account, it was protected. But since December 2010, the IRD can now issue deduction notices for joint accounts. If the person who owes the tax can make withdrawals without the other account holder's signature. So, if you have an either or joint account, which is the most common type, the IRD can access it for tax debt. The exceptions to this are, if your joint account requires both signatures to withdraw, the IRD generally can't touch it for one person's income tax debt, and partnership accounts are protected. But child support and family assistance debts are different. They are broader rules. But why does this matter for rural farming families? Well, many farming families operate with a joint either-or accounts for ease of day-to-day business. If one partner has overdue tax, that joint account could be subject to a deduction notice. It's worth having a chat with your accountant about account structures if you're concerned. Now, there are plenty of scams going around. With all this talk about the IRD taking money from accounts, scammers have absolutely jumped on the bandwagon. And here's what the IRD will never do. They will never send you a text message with links asking you for your bank details. They won't email you demanding immediate payment. They won't put the dollar amount of a refund on an email or a text. They also won't ask you to reply to an email or a text with your bank account details. And they won't speak to you threateningly or demand payment immediately over the phone. But what the IRD will do is contact you by mail with official letters. They will ask you to log into your myIR, but they'll never send you a link to do it. They may even call you from an 0800 number, but only after they've sent you letters and messages first. If you receive anything suspicious, check the IRD scam alerts at ird.govt.nz or call them directly. Don't click links or respond to unexpected messages. Alright, so how do you avoid ever being in this situation? Here are our top 5 recommendations. 1. File your returns on time, even if you can't pay immediately. Late filing penalties are harsh. Number 2, contact the IRD proactively. If you're struggling, they're surprisingly reasonable if you engage with them early. Set up an instalment arrangement. You can do this through myIR at any time, and it's a straightforward process. Keep an eye on your payment plan. Once you've agreed to the instalments, stick to them. This prevents further collection action being taken. Number 5, get professional help. If you're facing significant tax debt, talk to your accountant. We can help you understand your options and communicate with the IRD on your behalf. Look, we get it. Cash flow can be tight. As prices fluctuate and costs rise and fall with unexpected repairs and a blowout in the budget, sometimes tax payments slip down the priority list. If you're behind on your tax, here's our advice, and we've helped dozens of clients through this exact situation. First, don't panic, but don't ignore it either. The sooner you act, the more options you will have. Second, calculate what you can actually afford. Be realistic about your weekly or monthly payments. Thirdly, apply for an instalment arrangement through myIR. It's straightforward and can usually be done online. Fourth, keep your ongoing obligations current. Pay your current GST and PAYE on time, even while you're paying off old debt. And lastly, talk to your accountant. We can help you understand the total picture, negotiate with the IRD and create a realistic plan. Remember, penalties and interest keep adding up on overdue amounts. The longer you wait, the bigger the hole gets. So the bottom line, yes, the IRD can legally take money from your bank account or wages to recover overdue tax, but it's not arbitrary. It's not their first choice. They'd much rather engage to set up a payment plan and for you to stick to it. The real risk isn't a Section 157 deduction notice. It's ignoring the problem until you have no options left. If you found this helpful, please hit the subscribe button and share this with anyone who might need to know about it. If you're worried about tax debt or you've ever received letters from the IRD that you don't understand, give us a call at CMK Accountants 06765 6178 or email us at cmk.co.nz. Thanks for watching and we'll see you in the next one.